Welcome to today's episode. I saw an interesting article on Investopedia. I've got the camera on of myself as well today. And this is in regards to technical indicators. So I thought I would read this article for you today, just so that you can get a better understanding of technical indicators. And if we have some time, I will. I'll even show you. Uh, actually give you a demonstration on trading 212. So which one was it? This one. Okay, technical indicators are used by traders to gain insight into the supply and demand of securities and market psychology. Together, these indicators form the basis of technical analysis. Metrics such as trading volume provide clues as to whether a price move will continue. In this way, indicators can be used to generate buy and sell signals. In this list, you'll learn about 7 technical indicators to add to your trading toolkit. You don't need to use all of them, rather pick a few that you find help in making better decisions. So these will aid your trading decision making. And so there's loads. There's like Bollinger Bands, Fibonacci lines, oscillators. But what I'll do quickly before I get into the rest of the article is I'll just show you some basic support and resistance lines. So let's just do it like this. We'll do it for say, maybe not a month, maybe for a day, right? So I don't know how I zoom out of these. Ah, there we go. Right, so we'll say for this bit here. So you draw a line like this. I've not done this in a while, so maybe that's a straight line. So I mean, for the straight line, you could maybe let's see what it's like further along here. Can I drag this? Oh no, I don't really know if you could find a straight line here. Um, maybe for like maybe maybe for around here, you could say there was yeah, because you can see you have this bit here as well. I'll show you with my mouse. So you see there. So you could have said you had like a form of support here. Let me see if I can get an actual. Here we go, trend line. So you could have probably said, could probably drawn a line here. You could have looked at these two. So this point here and this point here, and you could have drawn a trend line. And you could have said like, you know, if the essentially if the price broke the support, then it would have obviously you could have seen that as like a sell signal or a short signal, and you would have shorted at um, 56 56.64. So that's maybe $56.64 if that's Coca-Cola, and so you would have shorted, and here again at $51.93 you would have also shorted because it's broke the resistance line you've drawn, and you can see in these two circumstances that signal would have worked. So if you would have shorted when the price broke here and shorted when the price broke here, where my mouse is showing right now, you would have actually made money just from these indicators alone. And you can also draw a resistance line. So for example with here, you could have seen that the resistance line was, if you would have taken this part here as an example, you could have drawn it, and you could have seen, yeah, the resistance, it broke its resistance there and it broke its resistance there. And but to be honest, it looks like it traded quite well between them parameters. It didn't really go too much above its resistance. So yeah, that's that, and then we can change it to the candlesticks as well. And so yeah, so here you can see that um, on the candlesticks the price went as high as $56.28 here. Yet it came back down into the resistance line, and here again and again here. So you can see that these trends, just doing it quickly myself, you can see that and it actually here actually gapped. So you can see that just drawing some quick ones yourself can can just can be quite effective if you're just trying to do something quickly. Um, so so that and also um there's there's different things as well. So like if the trend is, let me see if I can find one. Um, so like essentially, if the trend is what I'll do is I'll pause it so I can find a good point to explain it to you. Right, so I couldn't actually find any on Training 212, but I found some on this website here. And so this is like the sign of a breakout. So if you have a trend line, two trend lines, and the price is trading and it's getting tighter and tighter squeeze, then it's predicted that once the two lines converge, so like in this case it would be like that. Once it gets there, there would be a breakout, and because you can see here it's trending upwards, well the top line's quite flat, but the bottom one's trending upwards, you would expect that it would break out, it would trend upwards when it broke out. However, this one is an example of a failed breakout when it actually returns below its resistance level. So, and what I'll do is in the link to the video, I will also put the links to these articles so you can read them yourself. So, because this one looks quite good as well. Where was it? Here. So, the 12 types of technical indicators. So, this one goes into the fact that you have things such as um, like trend indicators, which was the lines I drew, but also you can have moving averages. Then you have momentum indicators, volatility indicators, volume indicators, and so that might be a good article for me to drop in there. Um, and this actually gives graphs as well. So yes, for example, some indicators are leading indicators which predict the future, and some are lagging indicators, which means like it's kind of looking through the rear view mirror of a car to see what's coming forward. So it's more historical data. So I would recommend taking a mixed strategy and using both. So right, let me try and storm through this now quickly because I'm already 8 minutes in. So key takeaways: technical traders and chartists have a wide variety of indicators, patterns, and oscillators in their toolkit to generate signals. Some of these consider price history, others look at trading volume, and yet others are momentum indicators. Often these are used in tandem or combination with another. Here we look at 7 top tools market technicians employ and that you should become familiar with in your plan to trade on technical analysis. Tools of the trade. The tools of the trade for day traders and technical analysts consist of charting tools that generate signals to buy or sell, or which indicate trends or patterns in the market. Broadly speaking, there are 2 types of technical indicators: overlays, technical indicators that use the same scale as prices are plotted over the top of the prices on a stock chart. Examples include moving averages and Bollinger Bands or Fibonacci lines. 2. Oscillators. Rather than being overlaid on a price chart, technical indicators that oscillate between a local minimum and maximum are plotted above or below a price chart. Examples include the stochastic oscillator, MACD, or RSI. It will mainly be these second kind of technical indicators that we consider in this article. Traders often use several different technical indicators in tandem when analyzing a security. With literally thousands of different options, traders must choose the indicator that works best for them and familiarize themselves with how they work. Traders may also combine technical indicators with more subjective forms of technical analysis, such as looking at chart patterns to come up with trade ideas. Technical indicators can also be incorporated into automated trading systems, given their quantitative nature. 1. On-balance volume. First up, the on-balance volume indicator OBV to measure the positive and negative flow of volume in a security over time. The indicator is a running total of up volume minus down volume. Up volume is how much volume there is on a day when the price rallied. Down volume is the volume on day when price falls. Each day volume is added or subtracted from the indicator based on whether the price went higher or lower. When OBV is rising, it shows that buyers are willing to step in and push up the price higher. When OBV is falling, the selling volume is outpaced by buying volume, which indicates lower prices. In this way, it acts like a trend confirmation tool. If prices and OBV are rising, that helps indicate a continuation of the trend. Traders who use OBV also watch for divergence. This occurs when the indicator and price are going in different directions. If the price is rising but OBV is falling, that could indicate that the trend is not backed by strong buyers and could soon reverse. So here it shows rising OBV confirms the price rise. So here you can see as OBV is rising, the price is also rising there. And then for the divergence, so then here you see divergence signal. So that means trouble for the uptrend. Now I'm on 12 minutes here, and I'm only on 2. So actually, what I'll do is I hope this helped for today. I'll make a part 2 to this video, and then we can pick up where we left off, and I'll also put the links to all of the articles as well in the description of the video. So I'll see you in the next episode, and thank you for now.